Who is starting to say that we do not need rate cuts? What does Jerome Powell have to say about the housing market? How about a tax credit for the move-up buyer? There's an interesting twist. Also, we can talk about a potential tax credit for first-time home buyers. We can talk about some great data from John Burns Real Estate Consulting. I want to give a shout out to Millennial Mike this morning, and I want to send a little condolences, or some condolences, to the family and friends of Steve Harney. Steve Harney is or was a wonderful follow on Twitter. His channel or page was called Keeping Current Matters. Steve was in the housing sector and was somebody that I frequently communicated with on X or Twitter. Unfortunately, he passed away suddenly last week at the age of 68. Remember, folks, tomorrow is not promised to any of us. We constantly get reminders from folks in our circle that unfortunate events happen. Remember, I am showing up every day as an example of doing the work, keeping focused. Hopefully that means something to you. We've been doing this for 5 years or so. You never know when that day is coming. So, do the work, stay focused, make some memories, be a good person. So, again, shout out to the one and only Steve Harney. Rest in peace. Keeping current matters. Thank you for all the interaction. Thank you for your wonderful voice, and you will be missed. Let's talk about BMO Capital. BMO Capital. BMO Capital is saying the quiet part out loud. What do I mean by that? There are more and more folks like BMO Capital that is saying the Fed should not cut rates. Look at what is going on in the stock market. Look at Bitcoin. Boy, have you guys looked at Bitcoin this morning? It is up to 72,000. Why the heck would the Fed cut rates? Right? As the inflation gets weaker, the Fed is promising to cut. More on that in a minute. But at the end of the day, I think there are more and more people going, you know what? The Fed shouldn't cut. Right? High home prices, high stocks, high crypto. It's almost like buying assets and holding works. Let's go on to Millennial Mike. Millennial Mike and I did an excellent interview yesterday where he took your comments. He always seems to start with the spicy ones. I don't know if you saw it yesterday, but there's a video I think called "Am I a Crash Bro?" or something like that. And it's because the first question was with a hater who was trying to call me a cash bro because he or she doesn't understand that you can have single family homes go up while commercial properties go down. And if you saw that interview, you could see me getting frustrated because I cannot fix stupid. I can't fix stupid. But yes, shout out Millennial Mike. The reason I wanted to do that is he has entered the next 5 years of his investing journey. Again, I have been very clear. The first 5 years suck. You are learning. The cash flow gets gobbled up by this or that. But if you can stay tuned, if you can keep doing the work, if you can do what others suggest, i.e. network, i.e. learn seller financing, you can really start to build positive momentum. I think Millennials Mike's next 5 years will shock people at what he is able to accomplish. But folks, you can't cut the line. You have to do the daily work. What do we talk about in the course? Getting focused, daily discipline, meeting 2 new people a week. Bad things happen, learn the lessons, keep moving forward. You have to get to the 5-year mark just to feel like you've made it. Real estate investing is hard. Shh. It's always hard. Something is always hard. It is always hard. But if you can get to it, it can be amazing. So one of the things that we all are going to have the benefit of doing over the next 5 years is watching this young man document his journey. And I really do think his next 5 years is going to shock even him. I want that for all of you. I want that for all of you. But again, you got to focus. You got to have a buy box. You have to discipline. You have to join the course so you can get in the Facebook group, so you can be around other amazing people. Trust me, if you're trying to do this alone and your friends are not supporting you, you will give up. But if you're in our private Facebook group and you're talking about the hard days, you will get support and you will probably get some advice. Folks, I don't know what to tell you. The course I have at $399 is stupid cheap. For this week, I just decided this right now. If you buy it this week, I will also include the Vegas event, which is a $200 value. Buy it, ask to join the Facebook group, and just get among other positive people. So again, shout out Millennial Mike. Congrats on the first 5 years. I look forward to watching you and applauding you and congratulating you over the next 5 years. How about we switch gears to President Austin Goolsbee. Folks, I don't know if you know this, but Austin Goolsbee is the last Fed president to speak before the quiet period. Yes, the Fed meets next week, so you are not going to hear a peep out of them. They are getting ready. They are doing their dot plot and all of that stuff, getting prepared. But Austin Goolsbee says, I expect rates to go lower as inflation cools further. The Fed will be less restrictive as the years go by. What does that mean? Translate that for me. Basically, what Austin Goolsbee is saying is what we've talked about for a year. I believe, my opinion, the Fed wants to be restrictive by about 250 basis points. All right, what the heck does that mean? That means you take inflation and you add 250 or 2.5%, and that will be the Fed funds rate. Today, they are about correct, right? 3% inflation, 2.5%, 5.5%. That is where they are today. They're a 5.25 to 5.5. But what happens if inflation falls to 2% and we see shelter inflation finally roll over? Well, there's going to be rooms to cut, even if the economy doesn't go into a recession. I think that is becoming a general opinion moving forward. Let's talk about all of these proposals from the State of the Union. First and foremost, what I remember from the State of the Union is there is a proposal for $5,000 or $400 a month for 2 years. So that's actually $9,600. That's 10 grand over 2 years. Who's going to get this free money? Free money, free money. Haven't we learned our lesson with free money? I mean, seriously, have we not learned our lesson with free money? But I digress. What are we talking about? First-time homebuyers are going to be getting $400 a month to essentially buy down the rate as it's proposed, 1.5%. Folks, let me ask you something. If rates were, what are they today? Let's call rates 7%, so it's easy math. What would happen in the housing market today if rates were 5.5%? I mean, seriously, what would happen? It would go bananas. It would go bonkers. And it would not go bonkers lower, as the Crash Bros want you to believe. It would go bonkers higher. So I ask you, do we need more demand? I think that answers itself. That said, there was also an interesting proposal for $10,000, essentially, as I read it, for the move-up buyer. That is interesting. That is interesting. Now, is $10,000 enough for you to want to give up your small home and go bigger? Maybe. The whole idea around this is basically to unlock entry-level housing. I think that is a great idea. I think that is a great idea. So, I think anything you could do to unlock more entry-level homes and get the move-up buyer going is a net positive. Is $10,000 enough? I have no idea, but we shall see. That said, remember, folks, these were things said by our president at the State of the Union. They are not currently on the floor of Congress. They are not being voted on, and not even sure they could pass. But I guess we shall see. Other things that I'm looking at this week, it looks like Barbara Corcoran is talking about the key to her success was hiring happy people. Folks, it is becoming painfully obvious to me that in the world that we live in today, you can generally think the glass is half full or half empty. If you are walking around miserable, scared, the world is ending, you're not going to take action. The world, the economy will run you over. It just will. It will run you over. You will go backwards financially. That said, if the glass is half full, you're willing to take some risks. More importantly, in my world, you're willing to do the work. You're willing to understand average. You're willing to do great deals. You're willing to network. You're willing to get uncomfortable. You can do amazing things. I implore you to block doomers. I know a lot of you go, no, Michael, I can't. I got one doomer for the opposite view. That is like adding a drop of oil or poison or whatever you want to your drink. You don't need that nonsense. We talk about reality on this channel, and it is not always rosy. You don't need someone whose job is to create porn or fear to scare you. Life is hard enough. How about Cody Sanchez? Cody Sanchez out there doing what she does, talking about buying small businesses. I do not know if this fact is true or this statement is true, but I thought it was interesting. According to Cody Sanchez, 10,000 baby boomers retire a day. That seems like a lot, but okay. 10,000 baby boomers retire a day, and apparently, according to Cody, 8 to 10% of those own small businesses. It's interesting to think about the opportunities you can get, especially when the baby boomers' kids want nothing to do with the business. That said, obviously, Cody Sanchez is talking about small businesses. What I am thinking about is real estate. How many of them are tired landlords? How many of them don't want to go through the next cycle? How many of them, I mean, seriously, how many of them have zero basis on their building, meaning it's depreciated to zero? How many baby boomers want to give the middle finger to the IRS, don't pay taxes? How many baby boomers want income with no headaches? Folks, if you have not figured out the 50-40-10, the 90% CLTV loan offered by Stephen Dow at Velocity Mortgage, you are not paying attention. I believe that one financial tool or one lending vehicle is without question the most flexible tool that you and I could use to buy real estate from baby boomers who want out. Give them income with the second mortgage, remove the headache by selling, reduce taxes, all of these things. If you haven't learned it yet, you need to check Stephen Dow's playlist. There's a deep dive on a playlist. There's a playlist called Deep Dive, he said slowly, with talk of the 50-40-10. I don't know what to tell you. You need to learn that ASAP. And then finally, we'll do a couple of quick things. John Burns Real Estate Consulting talked about the number of homes that are missing from the market or homes that are short supply. Last year, 2023, we were 1.7 million units short. Now we are 2.1 million. Folks, this is what I talked about a year ago with Lance Lambert. At the time he was at Fortune. I said, Lance, you don't get it. The commercial banking, the Silicon Valley banking crisis is going to take the small builders and put them on the sidelines. And that means we need even more supply. It is happening just like I expected. And then the last thing, we'll talk about housing, because again, the crash bros want you to believe that the new home sale price crashing is some kind of telltale sign that the world is ending. They're idiots, they're clowns, they're morons, but I digress. Did you know that one-fifth of new home sales in 2023 were townhomes? Folks, builders are filling the market. They They are generating more profit, higher cost per square foot by going smaller. They are meeting the market. And guess what? Smaller homes cost less. Alrighty, folks, I want you to have an amazing day. Remember, tomorrow is not promised to any of us. Make memories, do the work, focus. I want all of you to be alive in 10 years. Act like it, invest like it, do the work. Buy the course, join the Facebook group, be a part of this amazing community. Have an amazing day. Later.